Good morning, it's Jonathan Barratt with this week's Market Buzz, and lots going on. The markets are all over the place, which gives us a lot of fun and a lot of decisions that need to be made. I guess let's run through a few of the headlines we've got. President Trump rejects Iran's peace proposal. Go figure, makes sense. S&P, Nasdaq notch up record highs. Not quite sure why they're up at these levels, but that's where they're at. Apple gains after 3.4% increase in earnings, which was quite strong. Sorry, Apple gained 3.4% after strong reportings, which seems to be a little bit of a flavour in the US there. Energy companies also shine, ExxonMobil, Chevron, basically exceeding profit expectations. And then when you come back and you also look at the ISM Manufacturing PMI remained unchanged, whilst employment declined at its sharpest rate in 4 months. What does that tell you? We'll talk more about that further in the market buzz. Also, we find that Bank of Japan intervened in the markets for the first time for quite some time. This is the second bout in the last month. And it looks like 160 is a major area for the Bank of Japan, and it doesn't want to see the yen weaken any further. And the World Gold Council finds that central banks still lapping up gold and increasing their gold reserves. Also in Australia, the PPI rises to 0.4, a little bit softer than expected, although it is the 23rd consecutive rise for the producer price index, which is a little bit alarming when you really think through it. So a bit of a concern there. I guess the key here is now having a bit of a deeper dive into what's happening in the US, because it's quite perplexing to think that most companies have high input costs coming in, yet they're still exceeding profits, they're still making money, and the expectations are still there. Now, I think when we look at it, we sort of, what's the quickest way for a company to make profit? And that's to cut its employment and lower its labour costs. And I think that's exactly what's worth happening, because when we looked at the US, the Q1 US earnings seasons, they delivered notably stronger earnings per share. And sometimes rising as much as 20% year on year. And that could be linked to things in AI, it could be linked in a whole lot of areas. But I think if you exclude the earnings per share from the tech sector, it's still quite strong. So it's actually telling us that things are looking all right there. But if we take a deeper dive into what's happening, it is a bit of a concern. And this week we have the unemployment data out of the States, and it'll be a real focus for us, because when you do look at it, what are companies doing? Are they sort of reducing hiring? Are they making strategic moves? And I think it'll all really tell when you actually have a look at the unemployment rates or the unemployment numbers, which are due out on Friday. So it's very important to think, and particularly when you look at the non-farm payrolls. And in retrospect, although the last ones came in at 178,000, it wasn't back until June, July 2022, 2023, we're getting numbers in excess of 400,000, or in that matter, in July 21, it was up to about 800,000. So now the numbers are here, and in the last couple of numbers, they've been negatives and they've been positives. So there is something happening in that employment sector, which is sort of making a real change in terms of the dynamics. And I actually feel that companies are making these expectations by laying off staff. And to me, that'll basically see the unemployment rate, as it did, crack up a little bit higher last month, and I expect the same will actually occur, because more companies are making those decisions to lay off workers under the guise of a strategic move. And obviously that's the quickest way they're going to appease their shareholders. And I think that's the case. Remember, in the tech sector, for instance, since about 2020, there's been $900,000 roles cut from the market, and in April we saw another 9,700 leave the sector. So really is that the tech sector is either repositioning itself, or it's just been feeding itself with good profits, and now it's time to rationalize their industry. Meta in itself has also cut back there. They cut back 8,000 employees. So really, I get the sense that we're seeing a change, and even when you look at not just the tech sector, but you look at other companies, Estee Lauder, Sachs, they're restructuring all their operations, mainly because those cost of inputs are higher. They've got to sell more product, but they can't. So in order to readjust their balance sheets, they lay people off. So to me, that's what we're happening. We've really got to see what happens out of the Straits of Hormuz or the US-Iran war. That needs to have some resolution sooner rather than later. It needs to happen for the US side, also for the Iran side, but more so, I don't think the US can really channel all that costs, considering the government already has problems in terms of trying to fund itself. So there's a lot of things being swept under the table under the guise of the war, and I think they will eventually come to roost. So anyway, let's see what happens. Okay, this week we've got, obviously I mentioned those labour numbers, very important, non-farm payrolls. We've got JOLTS, we've got ADP releases early on the week. That's going to be quite a challenge. And we've also got the ISM Services PMI and University of Michigan Sentiment Index. Are both key are there for assessing the demand side momentum in the economy. So I think that's something to really, really focus on when it comes out. Globally, we've got the PMI, private PMI out of China, trade balance out of Germany, and we've got a few policy decisions in Australia in terms of the RBA. And I actually feel that with the RBA, we're going to sort of look for rates to continue to move higher, looking for that 4.35, which is just another 25 basis points to the top side. And I think when you see those PPI numbers telling us that nothing has changed, although they're reducing, I think the RBA will act sooner rather than later on that, which in itself might support the Aussie. Okay, let's have a look now at share my screen, and let's have a look at some of the trades that we're looking at, and see if we can make sense of what's happening there. Okay, I'll just share my screen. Okay, what do we got first off the blocks? Silver. Okay, now silver's been quite interesting, and I think it's worth a little bit more look at what's happening in the silver market. There we go. Yeah, and I think that when we had that spike up to that 120 odd, silver sort of was going up on a whole lot of things, a whole lot of reasons. Now those reasons are still there, and I think whatever we get a resolution out of the US-Iran war, those reasons and the demand from the green sector is certainly going to be there. In fact, more so because it'll focus on the fact that the high cost of energy now is a concern. And if you can put the world sort of tied it just because of the Straits of Hormuz and the supply of energy, put the world in a situation where it is, then that will drive people towards more of the green economies. Now, we did update this in Trade of the Week, so there's more information there. But essentially, it means that this demand for silver will still be there. And whilst the demand is there, and we still think there are deficits, then that will put more of a squeeze. Remember, silver acts in many ways. It's a byproduct of the production of so many other minerals. And if you're not producing those minerals, you're not getting that silver. So you've got this inherent issue where you've got demand always there, but the supply not. So, and I think that's why we did see that quite large spike to the top side. So I actually feel that we're going to have a revisit. When I look at the fundamentals for silver, still look quite good. When I look at the technical side, momentum indicators have turned around. It's corrected really nicely off from those highs, 120 or just under that 120 level. So I think if anything there, that consolidation period is over. I wouldn't be surprised to see prices start to move a lot higher from here. As long as 70-50 stays in play, and then obviously that 60-50 stays in play, then I've got to be quite comfortable to think that it will continue to trade higher. Anyway, that's our trade of the week, and that's the one we've logged. You can see here, you've got this beautiful correction here, and now we've just started a little move higher. So wouldn't be surprised to see it back up around that US 80 an ounce. So let's see what happens. And as you can see here, that's on the daily, on the hourly. Once again, still looking quite good there. Okay, let's have a look at gold. And gold, as we've mentioned, it sort of hasn't broken yet for that top for a run higher. I think eventually that will come. Momentum indicators are supporting the gold price. Would like to see a break of 48.75 on the top. and that would really set it up to that 5,000 level to confirm whether we're going higher or that's a double top. But I do like this consolidation here. And when I do look at it, as long as it stays above that level, 44.90, 44.50, then I'll be comfortable remaining long. Also buying on a break through that 50, 40, 40, where are we? There we are, 48.50. Okay, that's gold. Remember, World Council has said the reserves, central banks remain positive on buying gold. Okay, so let's have a look at some of the other things. Let's have a look at the ASX. ASX, we remain short. We are in this big sort of range, 9,000 on the top, 8,000 on the bottom, and we're right in the middle. So at the moment, I would favour it to go lower, but it just might continue to stay in this range. Let's see what the RBA says in terms of rate movement, but at the moment, I sort of think that it goes sideways and tests the lower end of the range. Let's just look at that hourly. As you can see there, a bit of sideways movements, but nothing major. As long as it stays above, let's just do that. There we go. As long as it stays above this level here, which is 8,570, then you can assume that it's still in the range. Okay, so let's have a look at the S&P 500. Right on those record highs. Not quite sure whether it's going to continue, but that's the trend at the moment. The stochastics and momentum indicators are all on their highs. So if anything, they're a little bit concerned. Whoops, there we go. A little bit concerned. We remain short, looking for the market to basically come back into understanding where it should be going. There we go. And understanding that these prices should not be sustainable. Okay, let's have a look at the Aussie. Aussie's another position there. And I'm very encouraged by the fact that it remains above 72. We are long and have been long for some time. I wouldn't be surprised to see it, see what the RBA says, but wouldn't be surprised to see it a lot higher from here. So if anything there, happy to remain long at the Aussie. And let's have a look at Brent, the final one. And as you can see, they're not quite sure what it wants to do, but it is at these highs. And there you go. And whilst it remains above here, anything can happen. Whatever happens in the Strait will be reflected in the oil markets. We have no positions in oil at the moment. Happy to take the profit we got and sit on the sideline. Okay, well, that's pretty much it from me for this week. Happy trading. Let's hope you make some profits. But she's certainly going to be volatile, so just be a little bit careful. And that's it from me. Bye for now.